Welcome to this video. Today we need to talk about AMD, Advanced Micro Devices. This company designs chips that power the world, and the stock went up over 100% in over 30 days. So the question is it now too late? Well, in this deep dive analysis, we're going to go over the fundamentals and technicals to find out whether this company could still offer a great opportunity for the long-term investor. So without further ado, let's dive right in. AMD is a company that designs chips. They make CPUs and GPUs for personal computers. So you've probably heard of the AMD Ryzen chips. They are probably in many laptops, and they're competing directly with the Core series of Intel. But they're not just making for the personal computers, also for data centers. So here we can read the 5th generation AMD EPYC server CPU, and this is for advancing AI, cloud, and enterprise computing. And these are like in these servers of data centers. And this 5th generation AMD EPYC server is really advanced, and they drive new levels of enterprise computing performance. And besides that, they also make GPUs for data centers, like for example, the AMD Instinct MI350 series. So these are the latest series, and all the data centers need those GPUs to run AI workloads. In short, AMD is an advanced chip designer, and they are very well positioned in the AI boom right now. We're now looking here on the charts on TradingView, and we can see that AMD is up 92% or something year to date. And we can see that it's now in a very strong bull market. It went all the way up over 100%, which is insane. And we can see that the exponential moving average are sloping up, but the stock seems to be a little bit overstretched. So if you're just looking at technical analysis by itself, it's better if it retraces more to the moving averages, and then you can buy on the dip on the uptrend. Here on the weekly candles, it also looks a little bit overstretched, and it looks overbought if we look here at the RSI, the Relative Strength Index. So I would say that it seems that it looks a little bit overbought. Is this company a great fundamental company? Well, here on Guru Focus, it's a score 81 out of 100, which is really high actually. So it's pretty good based on there. And if we look here at the financial strength, it's a 9 out of 10, and the profitability rank is a 7 out of 10. So that's also great. And if we look here at the earnings, we can see like revenue has been increasing, and the cash levels also increased. So the cash levels are much higher than the debt levels, which is really healthy. So this company is not taking massive leverage like other AI companies, which I really like. We're now looking here on the Slick chart. So this is basically the S&P 500, and we can see that at a market cap of around $700 billion, AMD is here on this list at number 15, which is really impressive. So it used to be all the way here down, and because of the great stock performance, it went all the way up. So it's one of the best companies in the world, which is really interesting. And this shows that the company is very resilient. We are currently in the middle of an AI boom, and this is a period of rapid growth in the field of artificial intelligence. And AMD is positioned really well in the AI gold rush. We can see here that it's basically like a gold rush, and it's the companies that are basically selling the tools are sometimes making more money than are digging for the gold. So who are actually making really the AI, making money of the AI? These are these cloud and AI companies like OpenAI, Google, XA1, Microsoft, Meta, Amazon, and they deploy AI service in data centers to train models, run inference, and build AI products that billions of people use. So during a gold rush, the people who were selling the shovels were often making more money than people who were looking for gold. And we can see here that AMD is essentially the premium shovel designer. So design AI chips like GPUs like the MI300X, the Instinct and EPYC CPUs. And they rely on TSMC, which is this company, to manufacture these advanced chips. But they are the designer, and they sell these chips to, for example, Supermicro, like that are selling servers, or directly to businesses who want to run AI models in data centers. We know that AMC is a great company. It's well positioned in the AI race, but is it cheap? Is it undervalued? And do we have a margin of safety? Well, on this article I wrote, we can see that the price to earnings ratio is high, forward PE is high, EBITDA is high, like everything is at a premium, even the price to sales ratio. So AMD appears expensive, trading at a significant premium across all key valuation multiples compared to its historical averages and many sector peers. The high valuation suggests strong investor expectation for future growth, particularly in its AI and data center segments. So the reason why these simple metrics where most people look at are really high is because of the expected growth of this company, and then it could be justified. But if we're just looking at these metrics, then I would say that the company appears to be on the expensive side. If we're going to use a discounted cash flow model based on Warren Buffett owning earnings, we can get a more accurate intrinsic value of the company. And so the owner earnings are essentially the net income plus the depreciation and amortization minus the capital expenditures minus the change in working capital. This is the owner earnings. And we're going to discount the future owner earnings to present value with a discount rate, because money today more valuable than money in the future. We want the money now. That's why it's more valuable if you make money today than in like 10 years. So let's type in AMD and we can get like the data. And we can see that the growth rate is 61.97%, which is extremely high. Here we can see on Finviz that the growth rate is expected to grow here at 61.97% for the next 5 years. If we look at the past, it was 46%. So I would say this is possible, absolutely, because it's a great business, but it's maybe a little bit too optimistic. So if we go back to the IV, let's just put a little bit lower to get a more conservative calculation. So we just to be sure to get a higher margin of safety, we're going to even use a higher discount rate as well. And for the terminal growth, we're going to use only 10%. So for the first 5 years, we're going to expect the company to grow by 50%. And then the last 15 years only by 10%. So then we get like a really conservative number for the intrinsic value. So if we calculate it, we can see that it's actually cheap. So based on this calculation, we can see that it's deeply undervalued with an intrinsic value of $579 right now, and a margin of safety of 26.77% and a potential upside of 36.56%. And this gives a value score of 7.9 out of 10. So based on this calculation, the company appears to be cheap if they keep growing like this. In short, because of the massive expectations, the PE ratio is justified despite 139 sounding absolutely ridiculous. That's why we have a very low PEC ratio at only 0.52. We need to understand that before we invest in the company, that there are also risks involved. Like, for example, intense competition from Intel and NVIDIA impacting market share and pricing power. At the moment, NVIDIA is still the market leader when it comes to the chip designer. It's a massive company, and there's a lot of competition. But because there's so much demand, there's enough for more companies. So, but we need to keep this in mind as well. There's a rapid shift in technology and consumers' preferences, especially in a volatile AI market, potential for economic slowdown to dampen enterprise and consumer spending on electronics. What's the bottom line? Well, AMD is a high-growth semiconductor leader benefiting from strong tailwinds in AI and data center demand. So before like this whole AI, these AMD and NVIDIA were making basically GPUs and CPUs for computers, personal computers, and gamers, and maybe crypto miners. But now, because of AI, there's a whole new demand. People building data centers like exponentially, and that's why they're making so much money. So investors should watch the company's execution in its AI accelerator roadmap and its ability to maintain market share against fierce competition. Here we can see the latest news of AMD, and we can see that it has done really well in the last few months. Like we saw in the charts before, we can see that the sentiment is extremely bullish. With 65 out of 100, we can see the significant increase in Citi's price target for AMD from 358 to 460 signals a strong conviction in the stock's future growth. And what's also interesting here is we can see that they are going to release earnings pretty soon. Not NVIDIA, not AMD, but NVIDIA. So if NVIDIA reports earnings in 2 days and the stock will go down, there's a gap down, then a lot of times AMD will also gap down because they're very correlated, and that could like create an opportunity to buy the stock at a lower cost with more discount when the stock is close to the moving averages. Finally, let's analyze the economic mode. Does it have a competitive advantage? So we can type in here AMD, we can analyze it, and we can see that it has a wide economic mode with an average score of 6.8 out of 10. So it has the mode consists of the brand power, the switching cost, the network effects, cost advantages, and tangible assets. And we can see that it does it best on the intangible assets. So AMD possesses a vast portfolio of patents, proprietary CPU and GPU architectures, and specialized IP from acquisitions like Xilinx, providing significant technological barriers to entry. So they do have a moat, but here are the strengths, like strong intellectual property in CPU and GPU architecture, strategic fabless manufacturing model, leveraging TSMC's leadership and growing presence and market share in high growth data center and AI segments. But there are weaknesses as well, like we talked before, like the intense competition from Intel and NVIDIA, who possesses larger market shares and R&D budgets. Reliance on third-party foundries like TSMC, because they need to manufacture these chips, and which can lead to supply chain vulnerabilities. Overall, I would say that the mode is pretty decent. It's a wide mode, and that is great, but it's not close to like NVIDIA or Google or Microsoft. Like, these companies have much higher mode. So a 6.8 is okay, but it's not like the best mode yet. In short, I think that AMD is a great company with a decent economic mode, and I think it seems to be undervalued. But I still prefer NVIDIA over AMD because I think it has a wider economic mode and it's a little bit more safer. But if this corrects more and we get even more margin of safety, then I'm interested to buy a position into AMD. But of course, always do your own research, always do your own due diligence. This video was just for educational purpose only. But if you like this kind of content, feel free to like and subscribe. And if you want to support this channel even more, consider becoming a member. And with that being said, I hope you have a great day and I'll see you in the next video. If you want to learn how to master stock analysis like a pro and find winning stocks and beat the market so you can build a portfolio that consistently wins, then feel free to check the link in the description down below.